Hi folks, this is Sean Hyman from Chart of the Day. I want to talk to you about a pair that I bet a lot of people don't talk to you about. It's the Aussie Kiwi pair or Aussie New Zealand pair. This tends to be a mildly trending pair or range-bound pair because of the similarity of their economies, Aussie and New Zealand. They're both commodity currencies. They're both in similar parts of the world. They both have similar interest rate hiking schedules. However, the Aussie interest rate hiking schedule is leading that of New Zealand right now, and so that's one reason why I had three trades that we put on. And I want to talk to you about those. The first one actually was in anticipation of the New Zealand rate decision, which I believed was going to come out to be a hold. And Australia had already hiked rates, so we had one winner come up here and then pull back, and we had another trade that I announced at a Sovereign Society meeting that we had in Los Cabos, Mexico, that had when the trade had actually broken out into an uptrend and pulled back. Recommended that trade, and then it has since gone up, pulled back again, getting ready to launch forward again. And in the service, we had just put on a trade again here as well. So literally all three trades, our one back here, our one up here, and our one over in here, have all three been winners on a fairly conservative trade, fairly conservative pair. So you can make money, you can do well, you can follow trends that tend to won't get away from you, even in mild trends, mild ranges, and have a fairly successful win-to-loss ratio. This so far, and of course we haven't closed out our latest trade. We're already up a good bit on it, as you can see through this latest trade in the Global Currency Cross Service. But this will show you how you can profit from moves, and here we had broken a downtrend. This was the reason why I'd given the trade recommendation once it had decisively broken and pulled back. Many times you'll see retests to the trend line, especially when they wick down and come up. Those are really nice entry signals, but we caught it fairly low. And then also on the pullback here, see, a lot of people get scared out because this thing, took a sizable pullback. But remember, Australia's interest rates, have hiked. They've hiked twice already on their interest rates, and there's even rumors that they may hike a third time as soon as December. So there's a possibility of 3 rate hikes in this year, and that's by far more than anybody out there in the whole G7 has done. 7 biggest nations out there. Norway has had 1 interest rate hike. Australia's had 2. Nobody else has had really any. None of the major currencies out there. New Zealand, they've said that they're going to raise interest rates probably around 2010, in the latter half of 2010. Now they can always change that, but the point being is the Australian Central Bank is already bullish, and the New Zealand Central Bank is not in bull mode yet. And so that's what gives this trade legs to the upside. Sure, there will be pullbacks along the way. Those pullbacks are your buying opportunities. It's almost like a stock that has a great earnings report and the trend is up. There will be times where there are sell-offs and pullbacks within the uptrend. If the company has great fundamentals, great earnings stream, and great outlook going forward, then you buy those dips. Well, that's exactly what we have here in currencies. We let this sell-off happen. We got in when we figured the interest rate potential was changing, and we also had a higher low. We got in again and suggested it once it had actually broken the downtrend and officially confirmed the downtrend change into a new uptrend and pullback. So that was a fairly conservative play, and then issued another recommendation within the Currency Cross Trader service for a second time. Remember, this one was in Los Cabos. This one back here and this one up here were in the Currency Cross Trader service. And it's headed up as well. So we've done really well with this Aussie Kiwi pair. It's one I would encourage you to keep a watch on. Of course, there are times where it can get a little volatile in here, but then when you compare it to other currencies and how they were in the same time periods, they were even more volatile. So again, it's still a more conservative pair, and right now we're in more of a conservative move here, because in a more controlled rather trend here, because the outlook appears to be more certain and more fixed with the central bank outlook for Australia and the central bank outlook for New Zealand. There are a lot of other central banks out there that aren't giving as clear a picture as where they're headed, and so it has traders trading it all over the place. This one is a lot more controlled because we have a lot more clarity from the two central banks noted here. So I hope that really shares with you a little nugget that maybe you haven't heard before. Thanks so much for attending the Chart of the Day.